Good evening and welcome to Your Money, Your Call. I'm Chris Kimber. Joining me in the studio tonight we have Ben Clark from TMS Capital and Roger Montgomery from Montgomery Investment Management. If you've got a question about shares, our phone lines are open right now on 1300 30 34 35, or if you prefer you can email us on yourmoney@skynews.com.au. Welcome to the program. Well, first trading day after our budget last night, and it was a bit of a fizzer. Market closed down at about 40 points after being off 55 at one stage. Probably the biggest belting came in the small resource space, which is probably off twice the amount of the rest of the market over the day, down around about 2.5%. The government handing out $2 billion in another sort of Harvey Norman benefit bonus scheme to the general public, as we saw in 2008, although back then it was $20 billion and there was a bit of a surplus to do it out of. This time it was $2 billion, much smaller. Flip-flop on the reduction in company tax, which left probably the market feeling a little bit flat. And then on top of that, there's going to be caps on super contributions coming from 50 down to 25,000, and the tax going up on those contributions for people who earn more than 300 grand a year to 30% from 15%. Speaking of value and valuable, Roger,
yes, mate.
you know, as we know from your book, how's the value today?
Well, it's getting better as the market goes down. Obviously, prices get closer to value, but we were last on the program, and I think I referred to a post that I wrote on my blog about the crowded trade in mining services.
Yep.
And the photo that I put up was of a train in Pakistan, you know, where there's no room inside, so
yes,
everyone hangs off the front and on the roof. And I said, that feels like mining services to me.
Yep.
A year ago when we bought these companies, brokers didn't have a mining services analyst.
Yeah.
And all of a sudden, over the last 3 or 4 weeks, every broker in Australia has been ringing us almost and saying, we'd like to introduce you to our mining services analyst. So we thought the trade was crowded. We sold all of our forge at almost $1 higher, not quite $1 higher than where it's trading now. We sold half of our deck mill. We've still got some Macca.
Yep.
And they've fallen 20% in some cases, a little bit more.
What about the big ones? I mean, even Monadelphous fell. I mean, we were waiting for that for fall for ages. Fell from 24 down to 21 and up a little bit today. Is any of the big ones cheap yet?
Well, they're starting to get cheap, and hopefully the viewers are going to ring and call about some quality companies.
Yeah.
Because one of the things that I know is that there's been a large following of people on this program who are interested in the exploration companies, the really thinly traded, highly speculative stocks. And it's all great when the market's going up and they're absolutely flying. You feel like on top of the world. But when you want to get out, it's usually when everybody else wants to get out at the same time.
And then you can't.
And you give back all of your gains. And people are finding that out now. So hopefully we'll get some calls about some quality stocks and we'll talk about their values.
All right, good stuff. Anthony from Adelaide. Hi, Anthony. How can we help you?
Good day, Chris. Thanks for taking my call.
Yeah.
My call is regarding Silverlake Resources, and the questions I've got is to Roger.
Yep.
When Silverlake Resources was around $3.70, he made a comment that they've doubled their price, and they were very happy with it. Yep. And he also made the comment that he expected it to go much higher, and I've got that written down here.
Yep.
Oh, great.
Yep.
Now,
I own the stock, so I've got it written down too.
My questions to Roger are you still holding SLI? And I assume you are, because you expect it to go much higher than 370.
Yep.
Secondly, do you still think it will go much higher? Yep. And thirdly, do you have any reasons for the enormous decline in the price?
Yeah, listen, thank you very much for your question, Anthony. Yeah, look, Roger was talking about this on the show, and I think all three of us probably bought some of this stock at around about $1.60 or $1.70 a year or so ago. It did get up to $3.60. It did do a placement at $3.40, at which point I'm pretty sure some profits may have been taken around the place. But Roger,
I think that's part of the reason.
Yeah.
I think profit taking is part of the reason for the selling.
Yep.
But we're not short-term traders.
Yep.
So, so Anthony, I have to tell you, yes, we do own the stock. Is it a massive part of our holding? No. Is it we manage well over $100 million, and it's not an enormous position for us, but we do own it, and nothing's changed in our view on its production profile. So therefore, nothing's changed in our view of its valuation. The gold price hasn't changed materially. I can't explain the short-term movements in price. It's not my job as a value investor. I'm buying businesses, not trading stocks. That's my philosophy, and that's how we invest. I think part of the reason is some selling of the stock that was received in the placement. People are limiting their losses and getting out. That could present an opportunity for somebody else. But we haven't sold a share of Silverlake Resources. We've sold other stocks, but not Silverlake.
All right, great. Thank you very much for that. Yeah, look, we like Silverlake as well, particularly after the pullback. It's got some, a copper deposit as well, which very bullish on copper. So I think back at 260, it's looking pretty cheap. We'll go to Brett from Sydney. Hi, Brett. How can we help you?
Oh, hi there, Chris. How are you?
Very well, thank you.
Good. Mine's regarding Iluka Resources.
Yeah.
My questions is going to Roger on this. On the scaffold program, it's trading at a massive discount to intrinsic.
Yep.
After today's trading, is it worth throwing the house at this one?
Listen, Brett, thanks. What do you think, Roger? What's your valuation?
Brett, I can tell you if you go to the scaffold line evaluate screen, you'll see there's two valuations there. There's a valuation that's based on analysts' expectations, and there's a valuation based on historical performance, the more recent historical performance continuing into the future. So it's really important that you understand that I prefer to buy at discounts to both of those valuations. The more conservative one, I want to buy a discount to that one as well. So just keep that in mind. But again, those valuations that you're looking at can change based on forecast changing. So you just need to bear that in mind. I don't own this stock myself. I think I've got enough exposure to the resource sector. And you're right, it is at a discount to intrinsic value. Whether the market recognises that, I don't know. Should you bet the house on it? Absolutely not. You shouldn't be betting the farm on any one stock.
All right, good stuff. Thanks for that. We'll go to Terry from Maitland. Hi, Terry. What's your question for us tonight?
Hi, panel. Thanks for taking my call.
Yeah.
Firstly, Chris, I just wanted to ask you where you thought Horizon Oil was headed.
Yep.
And if you had time, if the panel could give me their views on Boart Longyear, please.
Yeah, listen, thanks very much for your question, Terry. Look, yeah, we've been buying Horizon and I'm thinking it was very cheap in the 20s there. Oil price has done very well. The drilling that they've been doing in PNG as HZN actually is the Horizon code, HZN. And they've actually been doing very well over there. Still think the stock's probably worth north of 40, perhaps up to 50 cents. Had a little bit of a correction today along with the rest of the small resource sectors, but still happy to hold that stock with more drilling to come.
With Boart Longyear, there's 3 or 4 phases in where mining services companies can be involved. There's the exploration phase, there's a capex phase, and then there's a development phase. These guys are right at the bleeding edge, and so they're the first. It's the first tap to be turned off. So that's the first thing to understand. Second thing is this business's intrinsic value is not forecast to rise over the next 3 years. It's trading right on its intrinsic value now, or at a very slight discount to intrinsic value, but that intrinsic value isn't going anywhere or expected to go anywhere. I like to buy businesses that are trading at a discount to their intrinsic value, but they've got bright prospects for value growth. And this one simply doesn't. Plus, it's only generating a return on equity of about 18 or 19%. There are other companies generating much higher rates of return on equity.
All right. Thank you very much for that. Then we'll go to Abe from Sydney. Hi, Abe. How are you?
Thanks, Chris, for taking my call. Just wanted to ask the panel opinion about 2 stocks that I'm still unfortunately holding.
Yes.
One of them is Newcrest Mining, which I think Ben was happy to buy them at $43 at some stage, I remember. And the other one is Atlas Iron.
Yes,
and they've both been doing very badly lately.
Yes.
I just wondered what's the panel view about them in the short term, like 12 months.
Now, listen, thanks very much for your question, Abe. Look, in the portfolios, we've still got Atlas and some Newcrest. We sort of thought Atlas was getting very cheap. Newcrest was getting cheap when it got down to around about $30. So that's been a terrible performer. NPV, the stock's still north of $40, but they've had 4 production downgrades. They're really struggling. Atlas Iron, I still think is probably the best mid-cap iron ore player out there at the moment. But as I said today, a lot of these mid and small caps have been beaten up. I wouldn't be selling out of these at the moment. But Roger, there's a couple there for you.
Well, I'll leave it to Ben to answer the question directly. But I'd just like to say that when you guys were suggesting Newcrest,
at $30, you said you didn't.
I was a conscientious objector.
You were.
Okay.
Yes, I concur.
Yeah. And iron ore, just on Atlas iron ore, I'm not as bullish as many analysts are on iron ore. I've done some studies into the numbers, and iron ore production globally is going up. between 2010 and 2011, it grew globally by 8%. So it grew from 2,500 million tonnes to 2,800 million tonnes. It was an 8% increase. China took 60% of the 2011 global production. That's how much they consumed. The analysts who are studying China reckon that China could easily take another 50 or 60 million tonnes based on their steel mill requirements. Okay, if supply increases by more than 8% this year, which I think it will, I think it'll be substantially more than 8%, and next year more than that again, and for China to take 60%, it works out to something like 200 million tonnes that they would need to consume, and they don't need that. So there's 140 million tonnes potentially of iron ore that can't find a home, and China won't be taking it. I think, my ISLM analysis from Economics 101 tells me that, an increase in supply and no corresponding increase in demand means the price of iron ore is going to fall. And I've been talking about that now for quite some time. So I'm a little bit concerned about that. I think what you're saying is absolutely right, and that's led to massive overpricing of a stock.
Yep.
And everyone's got an opinion, but I think this is one of the most expensive gold companies in Australia, if not the world.
Yep.
And I think that's partly a function of the fact that it's had such a great story.
Yeah.
And everyone's piled into it, and that's held the stock at a very lofty level. It'd have to get to $14 or $15 before it even looked like a bargain for me.
Yeah, look, I mean,
I may never do that.
Yeah,
that sounds absurd at this level. But so did Telstra. When I was saying it was worth $3 and it was trading at $9 many years ago, I looked like a dill saying that too. But
boys, we'll go to Andrew from Brisbane. Hi, Andrew. What's your question for us tonight?
BHP and Rio, are they good buying at this point, or they've got more to drop?
Yeah, listen, thanks very much for your question, Andrew. Look, we've talked about these stocks regularly. Rio last year, we probably talked about buying that stock at 60 and selling it at 74 or 5 times, which was very profitable last year. I think Rio back at $60 is looking very cheap again. I'm more bullish on iron ore share prices than iron ore prices than Roger is, and I also think BHP might actually increase their dividend payout one day, and I think at $34 it's still looking cheap, but we'll start with you.
Here's the interesting thing. If they increase their dividend payout ratio, that actually reduces their intrinsic value because they're not retaining as much profit and compounding it at the high rates of return on equity that they're able to generate. So in theory, the way I value companies, that actually reduces their intrinsic value. So I think it appears to have found some sort of support around here over the last couple of weeks, and it is cheaper than my estimate of its intrinsic value, there's no doubt about that, but that estimate has been dropping along with analysts' expectations of the profit. I think if my theory is right about iron ore prices, then what we're going to see is we're going to see margin compression. I've heard all the theories about a lower iron ore price meaning that these guys will just pump more out. That's true, but it'll be like Jerry Harvey complaining that he has to sell more plasma tellies at the lower price to make the same amount of money. And that's what we'll see here. That's my view.
So BHP's intrinsic value above where it's trading?
I've always liked it more than Rio. I think it's got a better balance sheet than Rio. It's more conservative than Rio, and I've preferred it to Rio. However, and it's been at a discount to intrinsic value, but I've always had that view for as long as we've been on the program together that I'm not bullish about the iron ore price going up because of the supply response that I can see. And when you aggregate all the individual companies who say they're going to supply X times more iron ore over the next few years, then there's a lot of iron ore coming out. And I just think that's going to be negative. That'll be margin compression for BHP, and we might see it in the doldrums for a while. I've been in the market a little over 20 years, and the number of times I've spoken to investors and the number of times I've seen the chase for yield result in tears. It's just you cannot invest based on yield because you overpay, and there is nothing safe and there is nothing defensive about paying a high price for a stock just because it's got what appears to be a good yield. I was sitting at this desk and Telstra was at $5.70, and people were saying, but it's got a good yield.
Yes, yeah.
And they chased it all the way down.
But it was excellent at $2.80 last year.
Yeah, well, thank you, Harry.
We recommended it on the show.
Yeah, well done. And Telstra's profit in 2014 won't be $1 higher than it was in 2002.
Yeah.
You know, what's a business worth that doesn't grow its profits for 12 years?
Yes.
And everyone's getting excited because of the NBN. I was talking to a cab driver on the way here tonight, and he said, just explain this NBN. What is Telstra going to be when the NBN rolls out, if the NBN rolls out? And I said, well, here we are on the freeway, on the Gore Hill Freeway in Sydney, and it's very simple. You've got all these telco companies and they're providing a bus service on that highway. And all they're trying to do is attract the most people onto their bus with the best entertainment package. And that's where the game's going to be. Whoever's got the best package. So we may see Telstra bid for consolidated media, and that may happen. But it's all about just packaging up, bundling up the best entertainment and delivering it on that highway. And everyone will be able to swap buses all the way along. And that's what's going to happen. And they'll bring down the prices and there'll be no profit.
All right, fair enough. So
I'll tell you what I really think.
No, that's absolutely thanks for that. We'll go to Carl from Melbourne. Hi, Carl. What's your question for us?
Yeah, thanks for taking my call. Look, I'd like to ask the panel about their long-term view on a company called ThinkSmart, and also from a fundamental point of view going forward for the next 2 to 3 years, please.
Yeah, listen, thanks very much for your question. Look, I think that you can see by the chart there, ThinkSmart's had a very rough year, and I think you probably find there's been several guests on the show over the last year that have been thinking this stock is cheap from 50 or 60 cents all the way down to where it is. I think Fat Profits actually had a buy on the stock when it was around about 50 cents as well. I don't think the management have reported very well over their last couple of reports, and then they ended up doing a capital raising at quite a significant discount to market, which I think has really diluted everybody and kept the stock under pressure. So look, I'm not in it. I owned it at one stage, but then after they did the capital raising, moved on to other things. But look, I don't know, Roger, is that a bit difficult? Is it looking all right now?
We've been shareholders in this stock.
Right, okay.
We own a few shares.
Right.
We don't own very many because of the fact that it's illiquid. So when we actually run our models and work out how much of a particular thing we're going to buy, we have to screw down our weightings because of liquidity issues, which this company actually has for us. We think that capital raising was a problem for it, as you've described. But we do believe part of the pressure on the price is cyclical, and it's related to basically the recession that exists in retail in Australia. I think they have an opportunity to expand globally, and if that works for them, that will be very good. But we have to wait for the next year's results. So the 2000 results, just park that, forget about that. We're really talking about 2013. And if 2013 transpires as we expect, then its intrinsic value could rise to 50 cents, 53 cents, which is significantly higher than where it is now.
All right, great. Thanks very much for that, Roger. We'll go to Benson from Melbourne. Hi, Benson. What's your question for us?
Yeah, hi. I just had a question. I'm looking to add some coal stocks to my portfolio. I just was after an update on a stock that you had as a stock to watch about a month ago, being New Hope Corp. Nothing's been announced, but I've been watching it since it was on the show, and it's on the way down. Yeah, certainly is. Thanks very much for your question, Benson. Yep, look, I think I would have said to buy it after probably around about $5.10. Basically, they were running, Soul Patts owns about 50-60% of this stock, and they were basically trying to sell the company. They had, through UBS, had multiple bidders in there. The stock was trading up around about 6. Finally, they cancelled the bidding process. The stock came back off to 5. Usually, Soul Patts ensures the stock pays a special dividend, which they've done on several times in the past. But then we've had all of these coal stocks being given a bit of a beating lately. So coal prices coming off. So New Hope's fallen another 10% and has not paid a special dividend. So they only paid their normal dividend. So there was sort of two things of disappointment. Do you want to talk about coal at all, Roger?
Look, I think New Hope is like Newcrest. It's extremely expensive. It's got all the things that Ben talked about, but what it doesn't have for me is value.
Right, yeah. Fair enough. Thanks for that. We'll go to Stan from Adelaide. Hi, Stan. How can we help you?
Evening, Chris and panel. I want to talk about Ludowici, LDW. It might be one of these trains that Roger was talking about, but it seems to be a bullet train. I'm just wondering at what station I can hop on if you know anything about it.
Thank you very much for your question. I'm just going to pass that straight to you, Roger. Is that a bullet train? Is that not trading? Is that no volume, or what's that chart mean?
I think there's a takeover.
Yeah, there's
a takeover.
There's a takeover bid on it.
And it's been accepted.
At double the
And
price.
it's been accepted.
Yeah.
It's been recommended by the board and it's been accepted. So,
Right.
This had one of the best takeover battles I've seen in the last
you
5
can see
years.
the steps on that chart. You can see that each bidder was the two bidders were overbidding in order to get it.
Yeah.
It's been it would have been great, to be honest.
Is that what's a market cap of that? Is that a small company? Is it?
It was small.
I can tell you very quickly.
It's a Danish company called I think FJ Weird that's that ended up buying, or that could be the competitor, but it was trading
market
at
cap
about
of 318.
Wondered, really, it's still a sound company, but do you think it's also when things sort of right themselves on an even keel, it'll probably bounce back to 10, 20, 30% back up again, or what's your opinion on Alumina, both short term and long term?
Yeah, listen, thanks very much for your question. Look, I used to trade Alumina maybe a year or two ago when it was in the 2s, and there was plenty of broker reports around valuing that in the 3s, and we were waiting for a takeover bid that never ever happened. But I managed to get out without causing too much damage, and I haven't been back in or had a look at it.
David, if I might, there's a lot of talk about trading stocks. There's two very simple approaches to investing. One is you can treat the market like a casino where you can bid, you can bet on up or down, and that's what I think you're alluding to here with this particular company. The alternative is to buy businesses. If you're thinking about buying businesses, you want to buy really good businesses, and you want to buy them when the market's doing silly things, and you can get them very cheap, even cheaper than a trade sale. This isn't a good business. This is a business whose intrinsic value hasn't risen over a decade. In fact, its intrinsic value this year is significantly lower than where it was 10 years ago. And even next year, 2013, it'll be 40 cents if expectations are met in terms of its earnings, and 66 cents in 2014. And it's trading at $1. So even after this sell-off, which has come from all the way up from $2.70 down to $1, it still appears to be expensive.
Ben, would you punt it under $1?
No.
No?
No.
Same view. All right, thank you very much. So, yep, I think that's 3 people. I think there might be better things for you to have a go at. Look, it's time for a quick break, but before that, time to start the stock watch yet again. This time we're going to go to Roger to find out what he's watching, and his time starts around about now.
I like to buy stocks that are out of favour. I met with some analysts today and they really don't like Flight Centre. I do. We own it in our fund. This is a business that's generating a 25% return on its equity. Its intrinsic value is expected to grow by about 9%, and it's got no debt on the balance sheet at all. Analysts and investors are focused entirely on the domestic situation in the Aussie dollar, but they've got a great rollout story globally.
Excellent, good stuff. Welcome back to the program. Joining me in the studio tonight are Ben Clark from TMS Capital and Roger Montgomery from Montgomery Investment Management. If you'd like to get in the conversation, please call 1300 30 34 35 or email us at yourmoney@skynews.com.au. Stephen from Melbourne, thanks for waiting on over the break. How can we help you?
Hello panel, this is for Roger. I want to ring up about Hawkley Oil and Gas, HOG, on scaffold, had an IV of intrinsic value of 30 to 34 cents. So a slight reduction in production.
You sent me an email about it today.
No, I didn't.
Somebody else did as well.
Oh,
so
okay.
what's actually happened? What's happened is brokers aren't following the stock anymore. So there's no forecast for the company, and that's what's changed. So our data provider is now taking in analysts' expectations for all the companies that we look at, but there is no consensus analyst numbers for Hawkley Oil and Gas. That's the problem.
Okay, thanks very much. We're going to sneak a quick email in right now. Francis writes, I'd like to hear the panel's views on M2 Communications share entitlement offer. I've told MTU shares in his self-managed super fund and was wondering what direction would be the best to take in regard to these at $2.66 per share. Look, the short answer there for us is we hold that in several of the Fat Profits portfolios, take up your entitlement, still think the stock is reasonable value, and I would be sticking with it at the moment.
They're claiming 5 million of synergies in the first year, 5 million of synergies, another 5 million of synergies in the second year, and a further 5 million of synergies in the third year. You want to make sure they deliver on that. That's the thing we'll be watching. We own the stock. We'll be taking up. We'll be taking it up. Can I just divert back just to the investor that called about Scaffold and Hawkley Oil and Gas? I didn't get the opportunity to finish what I wanted to say. What we're trying to do for you is find some analysts that are actually covering that stock, introduce them to the data vendor to make sure that those valuations are still there for you. But because Scaffold is completely automated in the way it collects data, if analysts stop covering the stock, then there's not going to be any of those consensus forecast numbers for companies like Hawkley Oil and Gas. So bear that in mind. By the way, give me a call at the office and let me know if you find a broker that's covering the stock.
All right, okay. We'll go to our next caller, who is Shant from Sydney. Thanks for waiting on, Shant. How can we help you?
Hi, thank you. Good evening. My question is about Northern Star Resources, NST. I've been watching it for some time, and my question is it good time now, to enter into the stock and hold some for me here?
Yeah, listen, thanks very much for your question. Yeah, look, this was one of the ones that I think Ben made some pretty good money out of last year, and then they did a strange placement at around about $1.10 to European or hedge funds out of London. So we came in, we said, listen, we think we should sell it.
Sometimes from a board's perspective, if they believe the stock's run too hard, they can take advantage of that price and sell some stock.
Yeah.
I've seen it with CSL, Cochlear, where the price seems to be very expensive, so you sell some shares and the share price subsequently collapses, and I've seen the same company buy shares back.
Yes.
That adds value. So it could just be that they took advantage of a very high price for some distant possibility.
Yes.
The problem is, though, they're only going to get cash rates on that money, so it's going to lower their return on equity. But this is one of the high-quality, smaller gold companies, and we don't own it, but it's one that we like.
Okay, excellent. Thanks for that, boys. We'll go to David from Melbourne. Hi, David. What's your question for us?
G'day. I just want to ask the panel their opinion on the company Codan Limited, CDA, just where it's going and what they actually think of the stock. And Roger could give me the intrinsic value of it and where he thinks it's going as well.
All right, David. What sector is this stock in?
This is a
Roger knows about it. Yep.
Yeah,
No trouble. I didn't want to give you a hospital pass, mate. That was all.
Well, this is a business. This is a business that actually produces satellite telecommunication equipment. As well as metal detectors.
Right.
I like the business. I don't have any issues with the company at all. I just don't think it's ever going to be a very big business.
Yeah.
And I've got rising intrinsic value. It's a high quality company. It's at a discount to its intrinsic value. My current estimate is about $1.68 for intrinsic value. I've spoken to the CFO in the past. So yeah, it ticks all the boxes. But one of my questions is it going to be substantially or materially larger in 5, 10, 20 years from now? And I just can't see that happening.
Thanks for that, Roger. Excellent. We'll go to Sean from Melbourne. What's your question for us, Sean?
G'day. Thanks for taking my call. I just wanted to get the panel's view on Onesteel. I believe the shareholders have recently voted in favour of the name change to Arium to better reflect
the fact that it's no steel now. Yep.
It's move into mining and mining services, so I want to just get a view on that and its intrinsic value, I guess.
Yeah, listen, thanks very much for your question, Sean. Look, I think you might find Onesteel and BlueScope, I think we've been avoiding for about, I think that was probably the best thing we did on the show last year, is tell people not to own either one of them all year, while the Australian dollar went from 80 to 110. So I didn't buy it at the bottom and didn't get the bounce either. I'm still avoiding it.
I like businesses with competitive advantages. I like a business that a customer says, I've got to have that. I don't care how much it costs. I've got to have what you've got. And and this business is a business where people go, well, I can get it for this price over there. Will you match it?
Yes.
Can you do better than that? And it's just the wrong. It's the wrong approach. It's difficult to make money, so it has no. I don't think it has any competitive advantages really that are sustainable over long periods of time. Its intrinsic value hasn't risen for a decade. It's trading at about my estimate of its intrinsic value now. I think I value it about $1.01. It's trading at $1.18 or thereabouts. I don't think there's much in it in terms of a value opportunity, and I don't think it's a wonderful business.
All right, better things to do. Thanks for that. Well, it's Wednesday night, and I think the most amazing thing is we've just traded all day after the budget Tuesday night, and we haven't had one question on the budget. So I think that's probably a pretty good indication that it's not going to make a big difference to the market going forward. But look, that's all we've got time for today. So thank you so much to our guest, Ben Clark from TMS Capital, and Roger Montgomery from Montgomery Investment Management.